Hey everyone, welcome back to Databull YouTube channel. Today, we're tackling a shocking dip in healthcare stocks like UnitedHealth, Molina, and Centene. What caused the crash, and could this be your next big buying opportunity? Let's find out. In July 2025, some of the biggest names in Medicare Advantage plummeted. UnitedHealth took a major hit, Centene tumbled hard, and Molina sank to a new 52-week low. UnitedHealth is being investigated. The government is checking if UnitedHealth changed patient info to get more money from Medicare. This caused worry and made their stock price fall. Centene pulled its 2025 forecast. Centene said it can't predict its earnings for 2025 because medical costs are higher than expected and fewer people signed up. This made investors nervous and the stock dropped. Molina lowered its profit expectations. Molina also said it expects to make less money because of rising costs. This added to the negative feeling around healthcare stocks. Wider problems in healthcare. Overall, rising medical costs, government investigations, and changes in who's signing up are making investors cautious about healthcare stocks. These stocks have dropped sharply due to temporary issues like investigations and rising costs, not because their businesses are failing. UnitedHealth has over $25 billion in cash and investments and generates consistent profits of around $20 billion per year. Their debt is manageable, and they keep growing earnings every year. Centene holds about $5 billion in cash, with steady revenue over $150 billion annually. Their debt-to-equity ratio is reasonable, showing they manage money carefully even with recent challenges. Molina Healthcare has improved cash flow recently, with around $1 billion in cash and steadily growing revenue near $35 billion. Their profit margins are getting better each year. Discounted valuation is equal to chance to buy quality at a bargain. Because of the recent concerns, their stocks are trading at lower price-to-earnings ratios than usual. UnitedHealth's PE is around 20 below the healthcare industry average. Centene's PE is about 15, which is attractive for a company of its size. Molina's PE near 13 makes it one of the cheaper healthcare stocks with solid growth potential. This could be one of those rare moments smart investors look back on and say, "I bought the dip." Don't miss it. Hit that subscribe button and stay locked in with Databull for more growth videos.